Welcome back. Market selling off this morning, down about 200 points on the Dow Industrials. It started in Europe. We're going to get to that. Meanwhile, mega deals have pushed M&A values higher in the first quarter here in the U.S. There were 26 deals worth $5 billion or more in the beginning of the year, more than double the pace of 2017. Just this morning, JAB Holdings reportedly acquiring Pret a Manger for $2 billion. Joining us right now is Neil Dhar. He's the head of financial services at PwC. Neil, great to see you. Thanks so much for joining us.
Thanks for having me.
Before we get to what's going on in the U.S., what's your take on what's happening in Europe this morning? The president of Italy pushing back against forming a new government, Euro-skeptic government, and as a result, that has the euro sliding this morning. That is affecting markets across the world, down on the Dow as the dollar surges.
I just got back actually from a trip to Europe last week, and the overall, there's a lot of optimism in Europe in relation to a lot of big deals are getting done. I think folks are sort of getting their head around what Brexit's going to mean long term. Italy and Spain also, there's going to be some elections and things coming up here, are driving a little bit of uncertainty, but overall the environment in Europe is pretty positive, more positive than I've seen in a couple of years.
You think a lot of deals are going to be happening in Europe, and do you think that that Italy leaves the EU? That leaves the euro, rather?
Well, it'll be interesting to see how all that plays out in relation to there's so much.
But you do think there'll be deals?
I think, well, there's a lot of large-scale private equity deals that took place this year, big, chunky corporate transactions. I think you will see transactions in the financial services side of things in relation to Europe needing pan-European banks, and I think you'll see consolidation on that front as well.
All right, take us to the U.S. What do you see the deals happening in the U.S. then?
U.S., generally speaking, it's been very, very positive. Lots of big transactions happening in the U.S., deals, what we call mega deals over $5 billion. There was a lot of them, as you mentioned at the start. A lot of deals happening across sectors in relation to, in fact, 1/3 of the deals that took place this year are cross-sector deals. So companies looking for either technology or a different path to market in relation to
One of the things I've seen is over $30 billion of deals this year alone in the real estate sector. If you look at the retail side, you had Brookfield bought the rest of GGP for over $9 billion. If you look at the industrial real estate sector, you had a flurry of activity last month, right? Blackstone bought Gramercy for over $7 billion. You had Prologis buy DCT. Then Blackstone bought another hotel company. Are you going to see more consolidation in this space? I mean, do you see more of the deals going into harder assets like real estate, because that's where a lot of value is given what's happening with the economy? I mean, real estate does actually well in rising interest rate environments because the economy is doing well.
And we're seeing real estate deals all across the world. So you're right, absolutely. There's a lot of transactions happening here on the real estate front. A lot of transactions now starting to ponder around infrastructure. So again, hard assets, real assets, as you'd call them. What we're seeing is private equity or alternative asset managers have so much dry capital, over $1 trillion right now that needs to be deployed. So looking for returns in a lot of different places. We've seen, credit. A big play into credit. So absolutely, you're going to see the harder asset type of investments continue for the foreseeable future.
Is that because the low interest rate environment is expected to play out over multiple years? The spike in rates really didn't deter any of the hard asset investors? I
think what you're seeing is, you're going to see nominal increases, but on a historical basis, we're still at a very low interest environment, which obviously plays to the point that you're making.
So you think you're going to see more deals in financial services? You said asset management as well as what else?
I think with
insurance.
Insurance, we've seen a number of big transactions take place. We've seen actually a lot of insurers come out of their legacy books in relation to doing transactions. We've seen a big insurer spin off their U.S. assets in this quarter as well. So insurance has been very heavy. Banking will be interesting in relation to, with the regulation last week with Dodd-Frank being amended. We're going to see the mid-sized players consolidate. It's going to be more efficient for them to consolidate, and they're going to have to explore growth because technology is playing such a critical role in relation to that sector as a whole, in relation to the big players who are getting stronger and stronger because they're able to invest in technology.
Yeah, they want the data, and they want to mine the data. They've got the data, and they want to mine it. You're right. FinTech getting together increasingly. Neil, it's great to see you.
Thank you.
Thank you so much. Neil Dhar joining us there from PwC.